Hey everyone, welcome back to ScribbleStokes. Buckle up because the crypto market in early 2026 is a wild roller coaster, with uncertainty gripping traders as Bitcoin hovers around $62,000 after a shaky 8% drop in just 2 weeks. But amidst this chaos, something crazy is brewing with Chainlink's Link token. We're seeing unusual breakout signals that could point to a massive surge. Is this the altcoin to watch right now? Let's dive in and analyze what's happening with Link. First, let's set the stage. The overall market sentiment is pretty jittery. The fear and greed index is sitting at 38, firmly in fear territory, as of February 3rd, 2026. Investors are spooked by macroeconomic headwinds and whispers of tighter regulations. Altcoins, as usual, are taking a beating, with many down 15 to 20% month to date. But Link is bucking the trend. Over the past week, it's up 12%, trading at around $18.50 as I record this. That's caught my eye, and I'm not the only one noticing. Whale activity and on-chain data are lighting up, and I want to unpack why this matters for us as traders. Now, let's get into the meat of this. Looking at the charts, Link has been consolidating in a tight range between $16.50 support and $19.80 resistance for nearly a month. But just 48 hours ago, we saw a spike in volume, over 30% above the 7-day average, pushing price right up to that $18.50 level. The RSI on the daily chart is at 58, not overbought yet, but trending upward, signaling growing momentum. More intriguingly, on-chain data from Glassnode shows a net inflow of 1.2 million Link tokens to Whale wallets over the past 5 days. These big players are accumulating, often a precursor to a breakout. Exchange flows are also telling. CoinGecko data indicates a 25% decrease in Link on major exchanges like Binance and Coinbase during the same period. Less supply on exchanges often means reduced selling pressure. Combine that with a key metric. Link's staking rate has climbed to 22% of total supply per staking rewards, showing long-term holder confidence. These are the kinds of signals that make you sit up and pay attention, especially in a fearful market. So, what could this mean for Link and the broader altcoin space? If these breakout signals hold, we might see Link test that $19.80 resistance soon. A clean break above could open the door to $22 or even $25 in the short term, especially if Bitcoin stabilizes above $60,000 and sentiment shifts. But here's the flip side. If the fear and greed index dips further into extreme fear, say below 25, and we get more negative news, Link could retrace back to $16.50 or lower. Whale moves are promising, but they're not a crystal ball. The market's uncertainty means we've got to watch macro conditions and BTC's dominance, which is currently at 54%. If altcoin season kicks off, Link could be a frontrunner given its fundamentals. Decentralized oracles are still a hot narrative with DeFi and Web3 adoption growing. But remember, timing is everything. We're not in a confirmed bull run yet, and forced liquidations could spoil the party if volatility spikes. I'm keeping an eye on the $17.80 level as a near-term pivot. A drop below that might signal weakness. Alright, let's wrap this up with some action steps. If you're as intrigued by Link signals as I am, here's what to do next. First, watch those key levels I mentioned, $19.80 resistance and $17.80 as a potential warning sign. Second, track whale activity on platforms like Whale Alert or Glassnode. Their moves often lead retail sentiment. And finally, drop your thoughts in the comments. Are you seeing other altcoins with similar breakout potential? Or do you think Link is a false alarm in this choppy market? Hit that like button if you found this breakdown helpful, and subscribe to ScribbleStokes for more deep dives into crypto trends. As we look ahead, I can't help but wonder, with all this uncertainty, are we on the cusp of an unexpected altcoin rally? Or is this just a mirage before another brutal correction? Let's keep analyzing together. See you in the next video.